Well, good morning, everyone, and welcome to XPON's Q3 FY23 results webinar. My name's Jane Lowe. I'm the Managing Director of IR Department, and I'll also be your moderator for today. Joining me this morning is Matt Forman, who is founder and Group MD of XPON. Good morning, Matt.
Morning, Jane. Good morning, everybody.
Morning. And Leanne Wolski, who is CFO for XPON. Morning, Leanne.
Good morning, Jane. Good morning, everyone.
Good morning. Okay, so the format for today is that Matt and Leanne will walk you through the results that were released this morning to the ASX. They're also up on the XPON website at xpon.ai. The formal part of the discussion should take about 15 to 20 minutes, and then we'll follow that on with Q&A for about 10 to 15 minutes. If you'd like to ask a question, you can drop it into the Q&A tab in the ribbon at the bottom of your screen at any point in time, and we will field those when we get to the Q&A component. But with no further ado, I would like to now pass the floor across to Matt, who'll start sharing his screen and get us on the road. Thanks, Matt.
Fantastic. Thank you, Jane. Is that shared? Yep, looks like it's sharing now. Fantastic. Well, welcome, everybody, and thank you for joining us this morning. I'm pleased to present our Q3 results for FY23. So for anyone that may be new to the XPON story, just very quickly, just a quick overview of what we do. We're a cloud and MarTech company. We really help our customers make sense of their customer and their marketing data, and then we use that data to help unlock exponential growth for those customers. We work with customers across a number of different areas. We have our own proprietary platforms, which is our Wondrous customer data platform. Customers really use Wondrous to realize value in three different ways: centralizing their data, enriching that data with machine learning and AI, and then activating that data to marketing and customer experience channels. And our Holoscribe, which is an immersive experience platform, and our managed services. So we provide managed services against our own software and against some of Google's software and the Google Marketing Platform and Google Cloud Platform as well. And we have operations in Australia, in the United Kingdom and Europe. So to the results. So firstly, our ARR was 18 million for this quarter. So we exited March at 18 million. So that is up 23% year on year. And for anyone playing along at home, you will notice that has come down incrementally from 18.2 million in the last quarter. We did mention last quarter that we had some recontracting delays with some customers in the UK. Those recontracting delays have continued, which has impacted that number. We're also seeing some other recontracting delays in the UK as well. So we've got a very specific challenge in that UK market on one revenue line, which is our app modernisation revenue line, that's impacting that number. It's also impacted our revenue number for the quarter. So we exited the quarter at 3.8 million for the revenue. So it's still up 12% year on year, but probably a little softer than we'd anticipated as well. Our gross profit, 2.7 million for the quarter. So that's up 23% year on year. But very pleasingly, our gross profit percent is up to 72%. And we've stated consistently for quite a period of time, our target range for that was between 70 to 80%. So we're very pleased now that we sort of broke that barrier of 70 and we're into 72%. So that has absolutely helped continue to drive our gross profit and providing us with good margin for working capital as well. Our cash for the period was 5.9 million exit at the end of the quarter. So there was a 1.1 million reduction from the previous quarter. And that is in line with our expectations. And our recurring revenue stayed consistent quarter on quarter, where the vast majority of our revenue, 99.4% of our revenue is recurring. So just another quick, visual of that ARR, so you can see what that sort of looked like on the last few quarters of this financial year. We're continuing to work through how we refine our go-to-market strategy to address this challenge. We're still very confident that we're in the right place at the right time, and our pipeline's very strong. But there is some challenges in that UK market, specifically with that app modernisation revenue line. So unit economics still very, very strong. No churn, so 99.4%. So that's consistent quarter on quarter. Our customer lifetime value is 749,000 per customer. That is down very slightly from the previous quarter. Our CAC is 80,000, so that is up on previous quarter. It's still within our range of 12-month CAC payback. That's simply a mathematical formula of how many customers we acquired during the quarter, which I'll come to shortly. Our revenue retention rate's 172%, so still very, very strong. It is down slightly from 178% from last quarter, and that's impacted by those recontracting delays. Our CAC to LTV ratio, or LTV to CAC, sorry, is 9 times, and our total lifetime value is remaining consistent at 167 million. So some of the business highlights. So as I said, we landed 4 customers during the period. So that is softer than, I guess, previous periods. We are seeing that with marketing budgets, there is a lot more rigor being applied internally inside organizations as they're having to build much more robust business cases to support the investment in the solutions that we offer. We're not seeing we're losing deals whatsoever. And in fact, our pipeline still remains exceptionally strong. But what we are seeing is the time to close on deals is becoming a little bit more complicated because there's a lot more internal rigor, as I said, within those marketing teams as they're having to justify their investments more strongly inside the business. We managed to expand 12 customers during the quarter, and that's pretty consistent with what we've done in previous quarters as well. So our land and expand strategy is continuing to work. You can see some of the brands there that we've expanded during the quarter. So some very, very strong, well-known household names there as well. So very, very pleased with how the team's executing, expanding those customers, and very pleased with the value that the customers are realizing from XPON solutions. And just some business updates. So very good quarter, I guess, on some of the product roadmap. We continue to enhance Wondrous with additional Salesforce integrations and destinations, and continue to enhance the user experience. So it's much easier for our customers to continue to utilize that platform inside of their business. We announced during the quarter as well an expansion with a Zapier integration. So that enables our customers to activate their data and the machine learning predictions from their data to up to more than 800 endpoints. So phenomenal amount of value. And as I sort of mentioned at the start, the 3 ways that our customers realize value from Wondrous is centralizing the data, enriching it with machine learning and AI, and then activating it. And this Zapier integration very much sits in that 3rd value pillar around activation there. And that very much still does align with our strategy of integrating to the integrators so we can get leverage and scale quickly. Our headcount was 130, so that is down from 145 last quarter. That is from the reduction in on-demand contractors that were linked to the recontracting delays in the UK. And we're very conscious we need to ensure that our costs continue to align with the revenue. And if the revenue is softer, well, we need to adjust the costs accordingly. Net Promoter Score, absolutely world-class again for the quarter, 88. So the team are continuing to do a fantastic job with our customers. And you see that in the number of customers that we expanded during the quarter. And we also announced the appointment of Lisa Young as our Group CFO. So Lisa will be starting with us on the 15th of May. So we're very pleased and excited to have Lisa join the team. And unfortunately, very sad to be saying goodbye to Leanne, who will be retiring at the end of the financial year. So we've got a good 6-week transition period between Leanne and Lisa from the middle of May to the end of June. So everyone will get to meet Lisa, I guess, on the next one of these calls. Just to sort of talk through our growth pillars there. So continue to strengthen our existing solutions, and that may include acquisitions. I think we've said consistently that we're not actively pursuing that at the moment. The focus very much is on organic growth. We'll continue to keep an ear to the ground. We don't have anything on the horizon at this stage around that. Expand the value creation from product adoption from existing customers, and we're very much on track with that and continue to expand customers, 12 this quarter. Really leveraging our sales and marketing capacity and capability. Despite some of the challenges, I guess, in timing of the pipeline to get more deals closed this quarter. Like I said, the pipeline remains very robust. The tailwinds are still very, very strong for what we offer, and we feel very well positioned to take advantage of that. Continuing to expand our channel relationships. We've had some very good breakthroughs with our Google partnership in the UK during the quarter as well. And I may have mentioned previously that relationship in the UK with Google was a little bit more nascent than the relationship here in Australia. So we've really started to get some momentum on that. That is starting to come through into the sales pipeline now, which is very exciting. Nothing's came through from the sales pipeline into revenue yet, but very pleased to see how the team have really rallied around that in that market and have been able to sort of begin to replicate the great success we've had with that channel partnership in Australia. In the UK market, and then continuing to extend our Wondrous platform ecosystem. And for this quarter, it was the Salesforce integrations and the Zapier integrations that were aligned around that as well. So as far as outlook and priorities go, we're going to continue to assess the market conditions, and we'll continue to refine our approach to market to ensure that our cost base is matched to our revenues. Our focus and our outlook remains consistent, that we're going to continue to deliver on our promise we've made to the market to achieve cash flow break even for FY24. We still feel we're well positioned to do that. We'll continue to refine our approach to ensure that we do deliver on that. We'll continue to sort of maintain sustainable growth with a key focus on key customers and delivering against that core business offering, so software licenses attached to managed service subscriptions. Our ongoing product roadmap against the Wondrous development there. We're very pleased, I think, with some of the innovation that's coming through in the platform, and obviously there's lots of hype and talk in the market around generative AI and chat GPT and things like that, which we feel continues to position Wondrous quite strongly as that next wave of innovation comes through. And, the team are thinking, very strategically about how, our product roadmap can take advantage of some of that disruption as well. Going to continue to focus on increasing our gross margin. So we've cracked that 70% mark, 72% for this quarter. So very pleasing there. And we're going to continue to keep squeezing the orange there to extract more gross margin. Optimizing our sales and marketing activity to try and accelerate the pipeline and landing of new customers. We have lots of activities going on to help our customers move faster internally with some of the more robust sort of business cases they're having to prepare internally now for sign off on our solutions. Steadily increasing that customer revenue retention and keep executing on the land and expand. And like I mentioned around the Google partnership as well, continuing to expand that and validating that in new segments with new verticals and in new markets like we're doing with the UK to make sure we can continue to scale that core business offering. So that's it for the presentation for today. So Jane, I might ask you back if you want to ask me any questions, or there's any questions, Q&A from the viewers.
Thank you. Okay, excellent. So with that, I'll now formally open up the Q&A session. Thank you for the presentation, Matt. We do have some questions starting to arrive, and please just a reminder, if you'd like to ask a question, use the Q&A function at the bottom of your screen. So first question here, can you explain how you can expand and have such high revenue retention and expand 12 customers, yet quarter-on-quarter growth is nil?
So the revenue retention rate is a rolling 12-month metric, not a quarter-on-quarter metric. So that's you will see that has come off. It was 178%. I think it's dropped to 172%. But it is a view of a year-on-year view, not a quarter-on-quarter view. So that's why you'll see it the way it is.
Thank you. So has there been a trend change in the UK market relating to app modernisation that is impacting the recontracting of your customers? And do you consider this to be a core part of your business strategy, and will it impact your long-term growth opportunities?
Yeah, it's a good question. So I think you may remember, if you've read the prospectus and some of the other content that we've communicated to market, that we offer a full stack solution, which means there's multiple products that we offer our customers, and app modernisation is one of those layers, I guess, in the stack. We acquired that capability when we acquired the businesses in the UK back in 2020. So, it's been built off the back of, I guess, that acquisition, specifically in the UK. We have very, very minimal amounts of customers and revenue from that revenue line in the Australian market. But yeah, I guess what we're seeing is similar to what I was saying before about just the more robust sort of business cases and caution from customers to be able to move through on deals and proposals. I guess it's definitely a challenge for us in that revenue line specifically. And it is contained specifically to the UK market. I think like our Australian business is performing very strongly still. And like I said, the pipeline is very solid, and we've got some fantastic, well-known household brands in the pipeline, which are net new wins for XPON once we close them as well. So, I've got a lot of confidence, particularly in the Australian part of the business, but I do think there's some economic challenges in the UK, and there are some challenges specifically related to that revenue line in the UK that we're working hard to overcome.
Thank you. Okay, so another question. Did the customers with delayed contracts continue to pay for XPON services during the quarter? Are they included in the revenue during the quarter but excluded from the ARR?
So, showing this. So the way the contracting works with customers, and we've disclosed this to the market before, is typically customers will have a master agreement with this, and there will be multiple contracts attached to that master agreement. So in the case of the example from last quarter where those contracts, there was 2 contracts delayed, those contracts were delayed, but that customer still had other active contracts that were generating revenue and generating ARR. So in that case, the revenue attached to those contracts is counted as revenue. And as long as those contracts are still active, which they are, they count to annualized recurring revenue at the end of the quarter as well. But the ones that aren't active don't count.
Got it. Okay. Question here on AI. So how does ChatGPT affect your business model? And has its widespread integration changed your views on the threat of competitors?
I'm going to ask ChatGPT. Just give me a minute and I'll come back to you. Look, it's very interesting. It's very, very early days still. I think it's exciting. It's tremendously exciting. I think what it's doing to the marketing industry, I think the marketing and advertising industry will be one of the first industries to be disrupted completely by this new technology. And like I said, I think that bodes very well for us. AI needs data. It needs data to learn, needs data to be able to do what it does. And our Wondrous platform helps our customers manage that data. And, obviously we've got lots of conversations that we can't disclose really around how we want to use that customer's first party data to power very narrow AI use cases for our clients in the future as well. So I think, it's a changing space rapidly. We wake up one morning and there's this new technology announced that's changing the world every day nearly at the moment with this space. So we're actively watching it, but we feel like we're well positioned and feel it's very exciting.
Sure is making for some interesting conversations at the moment, ChatGPT. Okay, at what ARR number do you think you will break even?
We're not disclosing that. We're not doing forecasts. What I can say is that we're committed and confident that what we've said to the market around cash flow break even for FY24, we will deliver on.
Thanks. Okay, so question here on mix. If Australia is travelling strongly, does that mean that the UK went backwards?
I would assume, I don't have the data, so that's why I'm hesitating to answer, because I can't remember the numbers off the top of my head. But I would assume if the number went backwards and Australia's performing well, then that's what happened. Yeah. Good question.
So again on mix, if 12 clients expanded, when does that affect ARR, and can you give a sense of the impact that will have on ARR in dollar terms?
So for those customers that have expanded, they would have been counted in the ARR for this quarter already. But I can't give a sense of dollar terms because we're not segmenting by customer.
Okay. You landed just 4 new customers in the quarter. Can you remind me whether there is seasonality in your business, and if so, when are your slower quarters?
Yeah, we haven't seen seasonality. I think we've been fairly consistent with the acquisition of new customers. This was an abnormal quarter. What we did see was delays in deals getting signed off. Like I said, there's a lot more rigor. We feel like we're at the finish line, and then the customer comes back and says, "Oh, actually, can you give me this? I need to go and talk to the board, or I need to talk to my boss and put this business case in front of them." So there's that type of, more scrutiny on the customer end on making sure that they have everything in place to sign off on the deal. So that has caused the delays, but we haven't lost deals, which is why I feel very confident, because we're not losing deals. The deals aren't going away. They're still there, and the conversations are still active. So my read on the pipeline is it's a timing thing at the moment. Obviously, if that changes, we'll advise the market. But right now, we've got no reason to believe that it's not just a timing issue.
Okay, great. So employee numbers declined over the quarter. What business units did this impact, and what's the outlook for headcount?
Yeah, so those 15 that we reduced were on-demand contractors that were linked directly to those recontracting delays for that app modernisation in the UK. So that's where it impacted the people. We're going to continue to refine our approach to market and really try and understand how to navigate some of this uncertainty, particularly in the UK, and we'll continue to make sure our costs align with the revenue that we're producing. So we'll deliver on that promise of cash flow break even for FY24.
Okay. So question here on CAC ratios. So your customer acquisition cost has reached 80K and payback is at the top of your target range. Is this of concern to you? And if so, what are you doing to address it?
Yeah, look, it's not a concern. I think, again, back to the pipeline question, it's a timing issue. A CAC is a mathematical formula of how much you spend divided by the number of customers that you acquired. So, I'm not concerned by it. We've always said 12 or less months. We're at 12 months, so it's still within the range that we're happy with. Obviously, if that shifts, we're going to take action to make sure that we keep it within that range, but there's no need to do that at this stage.
There's plenty of commentary around the slowdown in media spend. What are you experiencing, and how significant is it to your business?
Yeah, and I think we've mentioned this on previous investor calls as well. One of the first things that happens in an economic downturn is marketing budgets get cut, and we've seen that across the board for nearly all of our customers. Not all, but nearly all. That impacts our usage fees, which is less than 10% of our revenue. That has been impacted, which it hasn't just impacted revenue, but it's also impacted our ARR number as well. So yeah, it has come off a little bit. We are seeing though, there's certain customers in certain industries that are actually increasing their spends. So that's a good sign, we think. And obviously the more we can help them and empower that with our data through Wondrous, and the better returns they get, then they'll be well positioned to continue to increase their investment in that area as well.
Right, thanks, Matt. So question here, does your focus remain on organic growth, or are you seeing acquisition opportunities in this current market?
Yeah, look, we're very focused on organic at the moment. Like I've said, we'll keep an ear to the ground. There's nothing imminent, nothing on the horizon. Organic's where we're focused. We want to make sure we win in the enterprise. That's the goal.
Okay. And then just a couple of questions here on customers in the UK. So question as to whether we're losing, if Australia is performing strongly, does that mean that you've lost clients in the UK?
We haven't lost clients yet, but we've had recontracting delays. So we haven't lost a customer there. Like I said, multiple contracts attached to the one customer typically. So that's what we're seeing is there's revenue lines from specific contracts that are impacted, not so much at the customer level, at the contract level.
Right. Okay. We have made it through our questions in the channel for today. Reminder, if anybody would like to ask a question, and thanks for all of those. There have been a load of them. Now's the time. I might give you sort of 15 to 20 seconds to get a final question in. Otherwise, I might hand back to you, Matt, for closing comments, and we will work on getting a wrap up of this video turned around for anyone that was unable to make it today. So it looks like no further questions at this time. So Matt, I might pass back to you just to wrap us up.
Yeah, no worries. Thank you, Jane, and thank you everyone for joining and for your continued interest in XPON. And like I said, things are changing, the environment's changing. We're adapting to that change. We're an agile business. We're a scale-up business that needs to be agile. And I've got confidence in the pipeline, confidence in the team. So we'll continue to execute against that confidence.
Excellent. And I will add my thanks to Matt for presenting, for Leanne joining us for the last time on this webinar today, and to everyone for attending and giving us your time. We look forward to keeping you across XPON's progress. Thanks all.
Thanks, everybody.